On one side, there's this Trump we used to know. Then there's a Trump that comes and grabs your president from his castle. Like, I think at this point the gloves are off. If he's willing to go that far for Venezuela, then the one thing he has been shouting about since he became president in his second term is that he wants the Fed chair to cut interest rates. There's a good chance that as soon as he selects someone whose policy, let's say, aligns with Trump's policy, then the market will be reacting to that.
Last year was one of the, I don't want to say the worst. US dollar was down 9%. Most major assets like or indices, Euro 50, 17%, the highest in a long time. Chinese markets 36% up. Kenyan stock market 51% up. Actually the best performing exchange in US dollar terms. Of course, gold up 80%. Silver up 149% in the altcoins, or rather they call them S coins. Last year, for some reason, Bitcoin didn't perform well.
We know the reason.
Let's not forget, just because we had a bad year last year,
It was not a bad.
Doesn't mean that you don't have a bad year
it
this
wasn't
year.
the very best.
We will be here in December 2026.
We'll be here.
I have a bullish feeling about platinum.
Hello traders, happy new year. I hope you had a wonderful festive season and relaxed your mind and obviously had a wonderful time with your family. Yet another episode of Bullish Banter, and we are joined by a good guest. Some of you have seen him before, and I think he makes a good guest for this episode given what has happened in the last few days. How are you doing, Rufus? Happy New Year.
Happy New Year. I think it's a good start to the year. Super bullish.
We will get back to that. Dominic, how are you? Maybe you can introduce yourself a bit for those who are not familiar with you.
Okay, so I'm Chris Dominic. I'm a relations and a partnership specialist. I've had experience in the Middle East and Europe, but at the moment I'm exclusively looking at the Asian market. So I no longer touch the EU.
Very nice.
Asian bullion.
Yeah. Before we go on, I think I need to, summarize what happened last year. Last year was one of the, I don't want to say the worst, but US dollar was down 9%. Most major assets like or indices, Euro 50, 17%, the highest in a long time. Chinese markets 36% up. Kenyan stock market 51% up. Actually the best performing exchange in US dollar terms. Of course, gold up 80%. Silver up 149% in the altcoins, or rather they call them S coins. Monero was up 136%, Zcash was up 860%. Bitcoin was up with a record high of 126K per coin, but it closed the year negative 3%. And CBK cut their rates by 375 basis points. I think FOMC was 100 basis points last year. Now, 2026. We are recording this on the 8th of January, I think a few days after Venezuela bombing. How are you feeling about World War III? Are you planning something?
Shall I go?
Yeah.
Well, for World War III, that's a little bit far-fetched. If the EU was involved, well, we look forward to that. But as long as it's just the US and Venezuela, the US at the moment is approaching war in the aspect of it has to be profitable. So minimal cost of executing it and also a windfall on the aftermath.
When it happened, I think oil just jumped a bit, even gold, no much reaction. Why is it the case compared to the last time Russia attacked Ukraine? The market went crazy for like a whole week, that February. Why do you think that the market is more or less non-reactive as you would expect it to be?
Well,
given that Venezuela is one of the largest reserve holders of critical metals that most countries would want.
If you look at the past, it's mostly historical and also how the market reacts, especially in the EU. In terms of war, as we have mentioned before, capital finds safety. And that capital finds safety in the US. If not in the US, they find themselves in also the gold or silver. Now, keeping in mind the EU in the past has executed capital controls on its own people, so locking in all capital, not moving anywhere, it will either find its path towards Bitcoin recently. If not that, then it will find itself towards gold and silver, mostly because gold is a neutral asset. For Bitcoin at the moment, with the whales being siding a little bit towards the US, they find it being a neutral asset, then most countries and individuals who first settle on gold, once EU starts putting capital controls on gold and silver, then you'll find Bitcoin moving, and also probably, most likely, we are more likely to see platinum with the digital euro in 2026.
Okay.
So that is one of the indicators, mostly because in the past they have executed the same. If you are to look in history, when the UK got into a world war and they were confiscating assets of their citizens, let's say you have investments in the US, you had to sell them, and then they were to exchange that for the British pound. So, if I've seen you mess it up before, then I'm not willing to wait for it to happen.
I think Chelsea fans know this better.
True, by the way, that's
To sell your assets. So, on the Venezuela thing, the way I see the situation is more like a game of chess. Once your king is cornered, the game is over. So what I'm seeing the market doing is ignoring the entire situation and reacting as if nothing is happening. So you would have expected that once their president is captured, their stock market would lose confidence and drop. But now it's up over 50%.
Even the bond market is more or less relatively stable.
Yeah. So the entire market is basically discounting the entire situation.
Or the more obvious answer, taco trade.
Yep.
For those who are not familiar, Trump always chickens out, whereby when things get hot and they are no longer, serving his interest, he will withdraw and then claim victory around the world. I would say some of the speeches that we have had recently, they want to, go to Greenland, and they want to take Cuba, Mexico, Colombia. Are these statements something that for you as a trader, for you as an investor, you look at in terms of how you allocate maybe your capital, or for trader, it's an opportunity either way? Is this something that you monitor regularly, or you're just like, until something significantly happens, you just move on as if nothing is being rumored about?
Let the trader go first.
Well, for me, the way I think about it is that the Trump administration we had last year is still the same. So all we did is flip a page on the calendar. So now as we get into the new year, nothing much has changed. The trends continue just like they were happening last year.
Okay.
China is still controlling the gold and silver market. They are implementing new limits on gold and silver exports. So that breeds into scarcity. You look at American companies, they are still competing real hard up to some point where the big tech companies are going for private bonds, raising funds just to invest in AI infrastructure. So the trends that we had last year will more than likely continue further this year. Okay. Especially if you look at the commodities market, you look at the new all-time high in copper this year. As he has mentioned, platinum is moving higher. Even iron ore is basically moving up. So I don't expect a change in that.
Okay.
So what could be a bit different would be, let's say, oil. If Trump gets control of Venezuela's oil, then he would most likely pump more oil into the market. Then that would change the dynamic of oil trading this year.
From what we have heard, they plan to maximize production, sell it in the market, the normal market operations, use the profits to run the government. Does this mean, I think some traders ask me, you should buy oil, and I'm like, if they are going to take the largest reserve of oil, then and Trump doesn't want inflation. One of the reasons why he is doing what he's doing is to fight inflation, and oil contributes a big part, then we might see oil going 40% or something like that. That's an assumption. But then again, producing such oil, and from some of the reports, is that it is not the best quality of oil, and it takes at least $80 a barrel to process it, then they would be doing it at a loss. Is this something that you think the administration would take on, or it's something that once they realize the financial implications, then they'll just forgo it like they do when something is not working for him?
Well, Venezuela having the biggest reserves, for one, they can politicize it. And when I say politicize it, it's more of like geopolitically. For Russia, they have managed still to get ahead of the curve through their friends from Iran, Russia, and China.
And India.
Yeah, and if the prices are high, or let's say are stable enough, they still make their money. If I can politicize this and tank to a significant level, not significant, but just enough to hurt Russia in such a way that they are willing to agree to better negotiating terms, because there's already a blockade on most of what they are trading, oil being the exception, then maybe he might use that to his advantage when he's trying to negotiate peace terms. Other than that, internally in the US, I think they might find a way on how to stabilize it, keeping in mind you say 2026, it's midterms, and that has been a touchy issue, especially if the inflation is a little bit higher.
Yeah.
And also within his camp, you are finding that there are some Republicans who are now fighting him off. Maybe if is to divert this narrative towards more of economic stability, he might survive 2026, and we might see hell rising again in 2027.
Interesting. I guess I have a poor history in predicting presidency, so I will not even attempt to say if he will win the midterm or not. But there's something which is coming this year which is very important. New FOMC chair. I think all of us are looking at, of course, the person he chooses will definitely cut rates and continue that up to maybe whichever number he will find fit. I think he wants it at terminal around 1%. What is your take on that? And especially given we have seen the dollar weakening last year, I don't believe he would want the dollar to continue to weaken. Would you say, as we approach the new FOMC chair, we might see the dollar strengthening even despite the anticipated Fed rate cuts?
Well, I'll need support from Rufus on this, mostly because the Fed is not like the ECB.
Okay.
Because the ECB is independent and it's more of like autonomous, but it's government.
Yeah.
From the previous peaks, we have seen a tendency where even though, let's say, the president picks his own chair, he does not go to the letter on what he wants. He has to have some form of to seem more neutral, because if, let's say, the Fed is seen, okay, so every single time the Fed has impact on markets, if he's seen to be linked to way towards the Trump, specifically Trump, then there will be highly volatile market. So I think even though, let's say, the Fed chair will be picked by Trump, he'll try to seem fair,
neutral,
or let's say neutral.
Okay.
And also there are some things that you'll have to hold back on, even though I'll just put it as that. I think what's important is we'll have to see the peaks and then now look at his background and then now predict on what will be the potential outcome. Because we got it wrong with the Treasury peak.
Yeah.
We thought that maybe he might be a little bit insane, but you're saying, but we are saying that he's a little bit more level-headed in how he's conducting the economy. He may say something, but he's not acting on it.
Okay.
Yeah. On one side, there's this Trump we used to know. Then there's a Trump that comes and grabs your president from his castle. I think at this point the gloves are off. If he's willing to go that far for Venezuela, then the one thing he has been shouting about since he became president in his second term is that he wants the Fed chair to cut interest rates. That has been pretty much direct. So knowing that Jerome Powell's term is ending in May and the appointments are happening in January, there's a good chance that as soon as he selects someone whose policy, let's say, aligns with Trump's policy, then the market will be reacting to that.
They'll be
Basically expecting like rapid rate cuts.
Though I have noticed he has taken, there's a two-way aspect to this,
Yeah.
where he could expect the next Fed chair to drop interest rate, or he could declare some sort of war
Yeah.
with the hedge funds and the PE firms in such a way that now there is the recent communication that they are being banned from buying up single-family homes.
Yeah.
So him picking the winners and the losers on that maybe might fare well with the citizens, where now they can acquire single-family homes. But for the PE firms, it seems that they're going to stick now with the multifamily and the commercial real estate. So he might try to double deal depending on how hot it gets. I'm pretty sure when it comes to ignoring, there's a limit to how much he can ignore, especially if the political cycle, the mid-elections, collide with his policy.
I think what we noticed last year is when the bond market goes crazy, he tends to tone down.
Yes.
So he exposed his underbelly somewhere whereby if you hurt it, now he'll have to come back to his senses.
Yes.
I'm asking that because last year, we have seen Kenya shilling stabilize at 130, given that, wait.
No, it's just fun. It's a good joke.
130, dollar down 9%, and we are expecting definitely further cuts given what CBK did and obviously what FOMC did. This year, I think there's a prediction that we might even have further cuts around 200 basis points and stabilize at around 7 to 7.25 in Kenya shillings. What do you think the Kenya shilling should be given expectations of such things? Will we perhaps go lower to 100, 115, or we will go back up to, 140s or 60s, given this is an almost electioneering period? And you know what electioneering periods bring in terms of money circulation.
Do you want to go first?
Go first.
Okay. So in the first time that I was
Trump
here,
will not come for you.
no, I'm not worried about Trump. but in the first time I came here, I think we talked about the Treasury.
Yeah.
And we had I had predicted the cutting of rates doesn't really impact much on the banks because the banks have their own confidence rating.
Yes.
And big banks usually focus on big business. So even though if we are technically underbanked, then that lowering the interest rate doesn't really do much other than, first of all, lower the cost of borrowing to the government, and on the other hand, for the big business. But for the SMEs and the general public, doesn't really do much.
Okay.
When it comes to the political cycle, I think what they've been doing, pumping the forex reserves with the remittances and also with their borrowing, and also how far they have kicked the can down the road. They will still weather the storm for 2026, 2027, and then 2028, because I think for 2027 they have pushed that
32 and 33 thereabouts.
Yes. So from 2029 all the way to 2032, that's where now hell comes back. But 2027, they have pushed that 1 billion that you're supposed to pay forward. But there's an issue where now they will put that pressure domestically. So for the MMF guys and the NSC guys, maybe 2028, you may now start saving a lot there. But for normally, as we have mentioned, it's more of like the pendulum swinging. So once the government sees no one is interested in lending them out, even the banks, then they will try and raise the rates again. So money that went to the NSC will have to flow back to the government assets until the cycle goes back again. It's usually a pendulum. So you watch out for that.
So sticking with Kenya, NSC last year up 51%, primarily driven by the three major banks. They did absolutely amazing: KCB, Equity Bank, and I think NCBA.
Well, interesting enough, most banks, because also Cope had held 13 for the longest time. All of a sudden, there was a growth on that.
That is very good. And then I think towards the end of the year, CMA gave license to Safaricom and Airtel, and so that you can trade stocks from within the app. And this is after NSE launched the single stock, trading. Given the local market, you had some words to put regarding the trading in NSE. Will this spur, I would say, involvement of people in the NSE, but will it spur the trading aspect, or people will come in with an investment, sort of plan?
No, because the market is not wired that way. Because the problem is, if people don't understand cycles, when it hits them hard, then you're just fortifying the misconceptions that they had about the market. It will just be fortified. Because, for example, if the government, by any chance, as you said before, the pendulum swings. It mostly swings for the government to the private. If it moves to the government side, and the MMF guys are comfortable, of course they get higher rates. When money is moving now, because consistently the foreigners were moving out of the NSE, even though, let's say, we had a good year last year. So it means that the local market, individuals who would have set their money in the government assets, decided to put more into the private assets, including their pension funds. So if that pendulum swings to the government assets, and the normal mwananchi has put their money there, and then they are left with the bag, then the word moves around, whether it's in TikTok, whether it's in Instagram, that actually whatever these guys were pulling off, they are ripping us off. They'll use the wrong words, even though, let's say, it's just a cycle. You have to time the cycle, or let's say understand different sectors have different aspects of it. For example, when you said banks, their stocks shot up, banks in Kenya are an outlier worldwide, because normally banks don't do that. If you look at Germany and the likes, the over banking in those areas keep them stable. They are able to facilitate economic growth to the SMEs. But here we have big banks, and they are few. We are actually underbanked, contrary to what the NSE or any other individual says. So fewer banks that are lending to also the SMEs, and also there are funds that come from Europe, and then they are used now to de-risk the SMEs. So you're finding the banks are making a lot of money, and their stocks also show that. So probably the best outlier is, if, let's say, we are coming up with a banking index, that's where I would say put your money there, and let it rest there. It will be comfortable in a banking index rather than the general one.
Don't you think the return from banks will be limited, since a good portion of their funds is ending up in the government pocket via bonds?
Well, you can play the MMF bit, but if, let's say, the interest go low, okay, you can double deal. You can do the MMF, or you can do the stock. The good thing, if you're dealing with the stock, if it's your bank, talk to your bank. Most likely, if, let's say, you have their stock, they are willing to lend against it. Now, if it goes down, of course, you'll have to top up, but it can still help you when it comes to the credit part of it. If you have an MMF, man, you can't have that discussion with your bank.
Because with the licensing, I think it allows for individual investors. It is not yet live for ZD Trader and even Airtel Trader. I think it should be live around February or March. You can actually invest in bonds, infrastructure bonds, stocks, individual, or indices like, even your favorite ABSA Gold ETF index.
Now you're making me happy for no good reason. But we will talk about that later.
Don't you think that liberalization or democratization will sort of deepen the financial markets in Kenya, or the financial markets participation in Kenya?
No. What will just happen here is most traders who actually know they play will make a lot of money, because you have too many passive investors. It's usually the other way around. If you have too many active investors, the passive investors work. That's why in the US, someone putting their money in an index fund makes more money, and yet you're giving your money to a hedge fund, which just puts the money there. But then, here I think for the traders, they'll make money now. The only problem is if, let's say, you don't have an educated population, you're still going to have a hard time. So, yeah, I think that's still my perception on this particular.
For me, one good thing I see around it is barriers to traditional entry, where you had to go get a CDS account, go via a bank or broker before you get shares. If you can simply get NSE shares on your mobile phone via the Safaricom app, then a lot more people will be more interested compared to the previous lengthy process. Yeah. So if you can just open your app and you can see the performance of several stocks on the NSE, and within a click of a button, you can buy via M-Pesa without consulting anyone, I think there will be more or increased participation in the market than we had previously.
So I only have one question. For example, I think I had shared with you it was 6% of the total are active, yeah?
Yeah.
So it means that people who are dormant there, so how does that bring them to be active? If, let's say, technically they are passive investors.
Well, like last year we had these meme stock frenzy happening in the NSE, which was quite unexpected.
Uchumi.
Uchumi
is the best performing company.
Uchumi being up 300% did make sense to me. Like nothing in the price action would match the fundamentals of the company. It's not like they were doing something magical or complete restructuring of the business that would attract so much capital. So a lot of the stock performance was in speculative territory.
And if, let's say, it's speculative, do you have a particular way where you can know who was actually moving that market?
I think it was just hype.
Because you could find some few individuals are like, let's test something out. I'm not quite sure, but if you can, we'll make a lot of money.
Let me give you an interesting statistics why this is important. ZD MMF, 2024, it had 1.3 billion. By the end of 2025, it had 15 billion. Meaning, if you have 100 shillings in your M-Pesa, 1,000 shillings in your M-Pesa, and you don't want to spend it, you just put it there and then you forget about it, right? Now, that is when MMFs were doing 15, and crazy numbers. But when the rates started being cut, now people started looking, okay, where can we go? And that is when NSE started doing crazy numbers again and therefore attracting more people. So I think right now in Kenya, CMA has licensed almost 150 funds. Means there's a lot of cash looking for somewhere to be parked or passively invested, but also people are looking for, there's this discussion if you go online, like you can buy your own US shares from your app, IBKR, whichever app you're using, FX Pesa, whichever app, you can buy US stocks, you can buy US index on your own, so that when a company announces 20% return and NASDAQ or, silver did 149%, you can individually do that. So with this democratization into mobile money application, it removes the network from being a network provider to a now financial services provider. And with platforms like this and people like you educating them, people can now learn or even do the research so that you decide. If you're too busy, put it in a passive fund. If you are proactive, then do it on your own, build your own portfolio. And in 10 years, there's enough, I would say, a functioning capital markets with diverse products and active, I would say, participants. Because the 6% you're saying, the 90% of those who are not using CDS is because, one, you don't know how to deposit. You deposit with your bank. You want to put 1 million. You don't know how to go about it. It will take another 20 days. And you see a strike price that you want to get into, but you can't do that. But US markets for 5:30 p.m. right now, I want to get in. I'll just wait, open, put my buy. I have my shares in Facebook. I'm good. Forget it for another 10 years or so. See?
Okay, so that I agree, because it's mostly educational. It's more of understand, first of all, different sectors have different cycles.
Yes.
And if by any chance, Treasury could be sedated. When I'm talking about a sedated Treasury, it's a sedated Treasury for maybe 3 years. I think you can find now stability. Because people, if let's say right now, you've seen how when Treasury makes a particular announcement, there's all this discussion on Twitter, also misinformation, and some of them drowning out the actual information. You find out if, let's say, Treasury touches a particular sector, and people are selling out of panic, that becomes an issue. So for me, I think even though let's say it's educating, it's also for the powers be to understand that their erratic nature should not be working in an active market.
Okay.
Right now, when you have too many passive investors, they can wait it out.
Yeah.
But now, if you have an erratic individual, now if there's a ZD trader, people get hurt a lot.
Well,
And now and also now where that's where the issue comes in, where now overregulation of something that didn't need that overregulating, just because people are just erratic during this brief period. And when you mentioned ZD moving from 1 billion to 5 billion, those are to 15 billion, those were people just, okay, you have all this marketing and the likes.
Yeah.
Putting it as simple as, when you put in your bank, you get nothing. You put it here, you get something. That's simple, yes. But people will try it out.
Yeah.
If after 6 months, someone say, look, but I got 120.
Yeah.
Now that's where people now start moving back now to their circles.
Okay.
Because now their circles are like, okay, you, what's this phrase by Thor? You
Thanos.
yeah. You try to whatever, but
And look where it got you.
yes,
Back
where
to
did he
me.
got you? Back to me. So that's the situation that we may get ourselves in, where now circles will try and convince them, look, that ZD thing never worked out. You have seen for yourself. Now come back. We'll give you an
Dividends.
18% or yearly.
What
That's
about
what's going to
the
wait.
NSE investors who have been in a 9-year bear market? Like, was it from 2015
Yeah.
to 2024?
Are you talking about Safaricom, guys?
Like those investors like really stuck with the NSE for that period.
Yeah.
And then last year they got some really good bumper returns.
Yeah. And the dividends were also good last year.
Yeah.
Well, there are some who the dividends keep them active. Like let's say for COP,
Yeah.
Yeah.
it has been 13 for a while. Doesn't give you that, what's the word? Is it capital growth?
Yeah.
Yeah.
But the dividend, this guy is serious enough where even though it's COVID, I still got your back. So it's like, okay, I'll wait it out.
Okay.
For ABSA, it was I think at 9. Now it's at 20.
Yeah.
Whoever was stuck with them where they were at 9, you have the dividend and you have the capital growth.
Yeah.
Now that's the bank. That's an outlier.
Yeah.
But now for other sectors where now I'm talking about the erratic treasury, that's where now you actually bite the dust. But there are some who are stuck.
Yeah.
I was like, look, there's no way I'm going to sell. I'm just going to wait. Because I have a friend also who bought some stuff. He was like, look, I'm stuck here. I've been made to be a long-term investor. I didn't want.
Bank holder.
Yeah. You're not a long-term investor, but now you've discovered you're a long-term. So
Can we stay time to marriage?
Yes. You find yourself now you have kids and you still come with stay. So there are investors who are stuck and also like, let me just wait it out.
Yeah.
The small here, maybe it pays some fees, but doesn't whatever invested back then, maybe I'm making more now because of my job change and the investments I've made somewhere else.
Yeah.
So they just wait it out.
Yeah.
I think for this year, investors and traders alike will definitely have some exciting opportunities and more importantly, diversification. Because you will have ease of access to NSE, you will have a very active global market, you will have a very active commodities market. So it's just upon you to do your research, find your niche, and I'm sure you will make something hopefully by the end of 2026. Now, AI, are we seeing the bubble pop, or it's just now like how do I put it, rooting itself, and therefore now the seeds are sprouting out? What is your view and expectation of it this year? Because there have been those who have been waiting for it to pop, and the returns keep on growing, and even though capex is reducing, there is still some interest in it, and even itself, the companies which are involved within that sector are still driving the stock performance up, and record high Nasdaq just recently.
Well, when it comes to AI, okay, there is the in quotes mchezo wa town, where there are AI companies and also there are AI chip manufacturers, and they are playing this. I'll invest in you 100 billion, you invest in me 100 billion. It's just a way to pump up the value. Now there's the other part where now government is coming in and getting AI companies to invest now in the military tech.
Yeah.
And that's where the value comes in. So China is doing that on its end. I don't know about EU, but the US is doing that in a great way. There's Palantir and the likes, though it's diverging a little bit too much towards a dystopian nightmare, because now with all that power, changed regime can use that power in the wrong way.
Yeah.
There is more use of AI in government systems, so I think that's where the value comes in. So it's not entirely a bubble, but now when it comes now to the startups and the likes who are throwing AI over and over again, there's a lot of money stashed up in the Middle East, and they have faith in that.
Okay.
So some of them, even though let's say you see there's an AI Bible, there's a huge reserve of money in the Middle East market that's willing to invest in such individuals and seeing how far they can go. Just for the last part, even though let's say I'm beating down on the EU, there's the EU companies also, AI companies, that have realized their market is not big enough for them. They're moving in onto the US market.
Which companies?
No, okay, I should.
UBS have indicated they might move away from Switzerland and go to US.
Yeah.
The one which bought Credit Suisse.
I don't think they can compete. If you look at the entire AI race, the EU is not there.
No, I'm saying EU companies that have good prospects.
Yeah.
And since their EU market, it's high regulations, a limited funding for whatever they want to achieve. So they just move entirely onto the US market and they're getting funding there. So it might have the perception of an AI bubble. AI bubble, but it's more of also some companies moving into the US, and also you're finding the US having more AI companies, and that may give a perception that it's a bubble, and yet if you're to give them time, they might get some footing here and there.
Yeah, there is an.
Don't you think like betting against AI today is like betting against the US, the entire US economy?
Not really. Not really.
Well,
let me put it this way.
SP 500 returns last year. Around almost 30% of the returns in the SP 500 came from the top 7 companies, Magnificent 7. Yeah, like all the capex expenditure mostly was going into AI infrastructure, data centers, and now it must work. Like if it doesn't work, like the US is really.
But look at these companies. Amazon has delivery services, has cloud services, has several businesses which are bringing money, real money, and then there is AI aspect, and that is probably cloud and chips that they sell, the products. Meta, advertisement, what else? Views on social media, and maybe products like VR and Oculus or stuff like that. So products. Apple, I mean, the phone itself, laptops, Apple TV, money. And then there is AI talk in it. NVIDIA makes chips. They're not an AI company. But what they do, like you said in Mchezo Town, they just write, these are AI chips. There's an episode for those who are interested to hear I think the only interview Michael Barry from The Big Short ever gave recently on Financial Times, where he has shorted, by the way, Palantir and NVIDIA. Why I'm saying this is because most of the companies have NVIDIA started rising when crypto mining was a hit. And then when crypto mining died down, AI came in and then it is there again. These ones are they just changed the name on the chips. Blackwell, this one is not for mining anymore. This one for gaming, or not for gaming. This one is for AI. So they are shovel. So long as you need a chip, they will be there. And I think if you shot against AI, you're shooting against, I would say, the notion that there is money for it, because it's expensive to search on AI while it's cheaper to search on Google. And Google now has their own platform. So you'll go back again to Facebook, or not Facebook, but other Alphabet products. And when you buy on Google, you are good. But AI bubble, I think they'll correct itself in price at some point.
Well, it will self-correct, but it will hit hard some other aspects, especially energy. I think last time you had mentioned something similar. And you find that, let's say, Microsoft, for example, is looking at also having its own nuclear reactor powering its data center.
Yeah.
So I think also with the recent move by Trump, I think it was today, where he's pulling out of some of these treaties, especially the climate action and the likes, it will give it room also to work on some of the. I think last time I had mentioned there are some interesting things, especially in nuclear energy, they are trying to do micromodular reactors, which are not relying on water, high temperature reactors. So you can have a micromodular reactor, set it up in 6 months, and it can power a data center. And that could, if let's say they are to get it commercially viable, I think I've seen them partner with South Korea and the likes, then they can also export some of those modules into Africa. I think we have tried to see some African companies push themselves as,
or data centers.
Yes, data centers mostly. But data centers and green energy doesn't really have a good, yeah.
Another, before we move to crypto, I think China has demystified the high spending habits because they are doing it at a cheaper price and at a lower energy consumption and still functioning at par with ChatGPT and all those modules.
You have to pause a little bit on low energy consumption because these guys are ramping up a lot of plants, as in it's coal, nuclear, wind, solar, all hands on deck.
Okay.
So we may not even know how much power it's consuming, but we know at least it's cheaper when it comes to funding
their production.
Yes.
Well, let's wrap it up with some predictions for the year. Last year, for some reason, Bitcoin didn't perform well.
We know the reason.
Yeah. Are you likely to see the same continue this year?
Well, there's the digital era at the moment. Now, as I mentioned, this EU has an issue with capital controls. For example, if you look at Spain, all of a sudden you can't withdraw 3,000 euros without explaining what you're going to do with it. So, first of all, they started off with freezing Russian assets. So with the cash, they did that. Also with neutral entities like this in Switzerland, they were involved. And now they are going out now for the physical assets, 50 billion worth. And they are going too hard where now they're involving Brussels into it. Brussels pushing back where you can't just acquire assets. And yet it's not the Russian state asset. It's actually individuals, Russian citizens. So you're just capturing their assets. Now, for people who are smart enough, if they're starting off with foreign individuals, then they're going to go for the nationals. And Ursula, in the past, she has floated the aspect of taking the savings of the European people and pushing it towards military, ramping up the military aspect. Now, for people who are smart enough, when you have the digital euro, if you're to remember what they did in Nigeria, when you're trying the digital naira, when you're submitting your cash to the government, if let's say there's an extra income that you had and you can explain to the government, all of a sudden they have the right now to confiscate it. Closer to home, you remember when you're switching our currency with the new banknotes, the individuals who didn't know where to hide that money, because when you submit it to the central bank, all of a sudden you usually normally conduct maybe some millions, but now he's 300 million. Where is it coming from? So you have to explain that. If you can't, if it's confiscated, what you're going to see is if the digital euro is going to go the way I think it's going to go, then Bitcoin will be the path. That's why when you mentioned Monero and Zcash being jumping higher, it's Bitcoin is the problem is Bitcoin is good for high volumes, yes, as an investment asset, as a trading asset, and also money laundering in quotes. But when it comes now to monetary and Zcash, I'm just going to use what it is. The government has its own interpretation. I have my own interpretation. But Zcash and Monero, what the aspect is also the anonymity, where you can't know where I got it from, and also what's in my account. You can't see anything. I think that's where now for people who are very much aware of the transparency of Bitcoin, they are now moving to Monero and Zcash. But for Bitcoin at the moment, if digital euro will play out the way I think it's going to play out, with the kind of nonsense they are pulling off with the US, trying to say that you're going to capture the military assets and use them.
Yeah.
On the other hand, trying to fight also Russians. And now you have the digital euro trying to force people into a control grid. Okay, add on to that, trying to silence free speech. That is a bad recipe. Those are just, they're just doing everything to just see how badly it can get in 2026. And
Well,
I think
I think
all
it's
aspects will go through towards gold. If they were back to what I said, if gold, there will be capital controls on gold and silver,
Yeah.
most likely platinum. If that's not the case, then we'll see Bitcoin going up again.
I think it's a template we have seen before.
Yep.
When these guys implement so many laws that eventually destroy an economy. I remember for Nigeria, you couldn't withdraw, was it $50 from the banks? Yeah, they kind of limited that. Then they started forcing people to convert dollars to naira. Yeah, just to make sure that there is no capital exit.
Okay.
And with what's happening in the EU, they are just implementing more regulations to make sure that there is no capital outflow. Yeah.
Is that a risk? Is that something I should be looking out for? Because as a trader, I want some opportunities to make money. What does that spell for Euro USD, for example?
Well, for example, okay, so what I noticed is you find capital, they couldn't buy gold bullions,
Yeah.
but they started buying gold stocks in the US. So you're finding that it's people frying in the oven, there's a gap, and there are some who are getting out. So you're finding there are some aspects where they will try and find safety in the US stocks. Now, the good thing is at the moment, as it stands at the moment, you find that also locally, okay, when I say locally, I mean within the Eurozone, the stock market also, it's fragile. Even in the London exchange, it's still not as productive. So you find all that capital will either find itself in safe houses, or if they can, I don't think the EU does real estate, but most likely I'm pretty sure I have a bullish feeling about platinum.
Okay.
Interesting, because what we saw last year was an increase in the EU budget for the defense sector, and that ended up boosting European companies in the defense sector, which basically drove indices like the DAX to new all-time highs. We also had the FTSE UK 100 being at an all-time high.
Yeah.
And even as we start this year, we are already seeing those markets trying to push even higher.
Yeah. So it looks like this.
When I say when I say it's activity, it's more, even though it's an all-time high.
Yeah.
You find the US, just the New York Stock Exchange is mopping the floor with all these markets combined.
Well,
so you're finding if there's also a risk of capital controls, I would like my money to be out there rather than in here, where now there's a correction and all of a sudden I'm burning with these companies.
I agree. At some point last year, Nvidia was worth more than the entire UK and Germany stock markets combined.
I think it hit 5 trillion market cap. Yeah.
No, it was four.
4 trillion market cap. So you say some of the activities that will have to unfold this year will determine how Bitcoin goes upwards, right?
Yes, I would watch out for how they execute that digital euro.
Okay.
I think it's a bloody way they're going to start with, because the initial aspect is more of all the banks. The ECB is chaotic. So some of these banks are limiting also how much you can withdraw.
Okay.
And if that's the narrative that you're starting right now, someone like, how will it be when now you're doing the mass market to the digital euro all around?
Okay. All right. So last year we made some bets here. Yeah. Well, this year I want to change it a bit. I want you as traders to be involved. So just on the comments below, please put in your prediction. We will take at least the top 3 on different markets. It doesn't have to be the same one. Gold, or we know we'll hit even 10,000 if we want, or you want as traders. But I want, I would say, in the unique market, niche market, where will silver finish, for example? That is number one because it's trading now at around $80. Yeah. I don't know about you. Which asset do you think will outperform the rest, especially in the metals? First of all.
In the metals, I still hold on gold,
Okay.
mostly because the BRICS stepped back from the issue of setting up that currency
Yeah.
based back to gold.
Yeah.
They realized they will be pulling off what the euro is doing at the moment,
Yeah.
and that will be falling. That will be falling in place in the hands of the GP Morgan and the likes. So
Okay.
they backed away from that.
Yeah,
So I trust all countries that feel jittery about what's happening in the world, they'll still stick with gold and silver
So what price?
because
are
it's
you,
neutral.
What price do you think
It
might
will have
be
to.
the highest?
It will have. I think it will have to revert a little bit back
Yeah.
before now.
They shoot up.
Yes, mostly because it depends. No, it mostly
Just
depends.
give me a number.
with-
Just give me a number.
No. You know, go
a
into
little hours before it gets better.
it's more of like predicting
Yeah.
the European
You're not
Union.
calling the market. You're just saying we might hit here. I mean, JP
Well,
Morgan are
the-
saying
the-
5,000.
the
What is
issue is-
Chris saying?
The issue is
Yeah.
the calls for war.
Yeah.
Now that I can predict,
Okay.
but now if you get to war, all assets go down.
Well, it adds a premium on
Technically,
gold.
Yeah.
Yeah.
But in the past, you find that all assets are going down.
Yeah.
Also, gold has been affected.
Okay.
So all your predictions, everyone bites the dust.
Okay.
When everyone is pulling their money out.
Very political answer. I think you've already mentioned Kenyan stock market. We look at the Kenyan banks. Rufas, in the global scene, which sector do you think will perform best this year?
Well, yesterday I was looking at one company, SanDisk, which is up over 800% in the last 1 year, and we today is date 8th January. It's already up over 50% year to date. Like in just a couple of trading sessions, it's up over 50%. So it's one company that just got listed on the SP 500.
Yeah.
So of course, much of the rally is because of index funds allocation into the stock. But then there seems to be some form of a shortage in memory. So by memory,
Pun intended.
It landed so perfectly. Go ahead.
so by memory, I mean like the NAND and the RAM. So these AI and digitization of the world, there's a lot more happening digitally that is requiring more memory. So from the COVID transition from work from the office to work from home, or migrating to the cloud services, data centers being expanded everywhere, there seems to be so much demand that companies that provide these memory chips can't meet that demand. So that shortage is a key play for this year.
Okay.
So whoever owns the memory owns the money.
Interesting.
Yeah.
That's actually an interesting insight. I hope you will do something about that as traders. Chris, your closing remarks?
And of course, Bitcoin. Bitcoin. Let's not forget. So just because we had a bad year last year,
It was not a bad.
Doesn't mean that you don't have a bad year
it
this
wasn't
year.
the very best, considering like if silver was up 149%, I would have expected Bitcoin to really do well. You kind of get used to Bitcoin giving you over 100% a year.
Yeah.
So when you are down 3% in a year, it's not really good. But what I saw as a big shift was there was no much performance in Bitcoin. Structurally, there was a lot of changes last year.
Yeah.
So from the passing of the Genius Act in the US, new CFTC chair who is pro-crypto approved a couple of ETFs in other cryptocurrencies. A lot of countries implemented legal frameworks for people to use Bitcoin and other digital assets.
Including Kenya.
Yeah, including Kenya.
Yeah.
So while the EU was tightening to make sure they control the capital in the area, the rest of the world has been opening their arms to Bitcoin. So good chance that with the developments we saw with companies, we call them digital asset treasury companies,
Yeah.
like MicroStrategy. So we had a lot more companies adopting Bitcoin, and every time they buy, we don't see them selling as much. So that is driving scarcity. So we could be seeing what perhaps 150 is a good bet this year, 150K.
Interesting.
Yeah,
That's a good
We will
joke.
be here in December 2026, and we hope that we'll be there.
it'll be here. It'll be here.
Yeah, your closing remarks at least, and maybe your call for the year, something you, besides, of course, what you mentioned.
I think the only thing that I can tell the viewers, it's more of study economic cycles. It really helps with the investment journey. I wouldn't like to call anything because when you put your bet based on a professional individual, you'll start blaming him when he goes
Well,
down.
it's not financial advice.
No, it's not financial advice, but understand economic cycles. He understands it. That's why he's long on Bitcoin. But if let's say you're there for a quick win,
Yeah.
well, you
need
buy
the
the
skills.
dust. You actually deserve it because you don't understand the cycle that he's investing in. So that's the only thing that I can mention as a closing remark.
Thank you very
Are you
much.
buying Safaricom?
No, I'm not touching it.
Well, they'll make some revenue from the stocks trading. Look at it. Otherwise, thank you very much, guys. I think that was a good intro for the year. A lot has been discussed to lay foundation for some of very interesting conversations we'll have this year. And you will find more on investing, crypto trading, forex trading, gold, and bonds market, and other financial plays or conversations. So keep tuned to Bullish Banter. Don't forget to like, subscribe, share your questions, share whom you'd like us to host, perhaps, so that 2026 is the year that you learn more about the financial markets, you grow your wealth, and hopefully improve on your skills in the trading aspect. Until next time, stay bullish.